What does a bond's yield to maturity actually measure? Most sources discuss yield to maturity as a measure of return to maturity. But is that a likely outcome given the reality of unknowable future interest rates? Is yield to maturity likely to be an accurate measure of future returns? Or is it more likely to be expressing something related to a bond's value today? Hi, this is Doug Carroll from Insider's Guide to Finance, announcing the release of my recently published book, Interpreting Yield to Maturity as a Measure of Relative Value and Risk. Yield to maturity is a hugely important concept, yet one surrounded by a great deal of confusion. Unfortunately, getting an accurate grasp of the true meaning of yield to maturity is not easy, since it is almost always defined as a rate of return. Indeed, often as the certain return to maturity, as long as there's no default. This amounts to professional malpractice by authors and instructors that spout such nonsense. As counterintuitive as it might seem, the only value yield to maturity precisely quantifies is a bond's market price. Yield is a bond's price re-expressed as an interest rate. Suggesting a bond's yield as its price is not news to anyone familiar with fixed income securities. Despite this, the great majority of securities industry professionals do interpret yield to maturity as an expected or forecasted return. A concept so wrongly misconstrued by industry insiders is not likely a concept that is accurately understood by outsiders, whether they come from other sectors of the financial markets, non-financial businesses, or even academia, including a disconcertingly large proportion of professors in economics and finance. Even the minority of sources that correctly identify yield as a quantification of price never attempt to explain that equivalence. Immediately after noting the equivalence of price to yield, yield to maturity is almost always exclusively discussed in terms of future returns. But then where's the problem? If most bond market professionals conceive of yield as a measure of future returns, mustn't that be so? In truth, yield to maturity at purchase might be a reasonable estimate of future returns to maturity, at least in some situations, such as for short maturity coupon bonds or zero coupon securities of any maturity. However, yield to maturity and realized rate of return measure very different things. And this becomes immediately apparent as soon as the formulas used to compute each are shown side by side. Given that return and yield are measuring different factors, it should not be surprising that the two can diverge widely for intermediate and long-term high coupon bonds. Interpreting yield to maturity as an estimated return becomes most problematic when it is used as a proxy for period returns. Even a cursory review of the data reveals that year-by-year investment performance for intermediate and long-term bonds of any coupon rate can vary dramatically. Thus, period returns often differ by hundreds or even thousands of basis points from the yield at which the securities were purchased, or even the yields at which the securities were trading at the beginning of the period. The primary focus of interpreting yield to maturity as a measure of relative value and risk is making the case that the real meaning of a bond's yield to maturity is not its future rate of return, rather it's the cost or value today of a bond's cash flows to maturity. Unlike most books that seldom do more than assert various assumptions or interpretations regarding yield to maturity, the case I am making is grounded entirely in the mathematics of price and yield, and based on the actual market conventions and assumptions used for relating yield to price. All of my arguments are supported by mathematical analyses using various algebraic perspectives on the price-yield formula. Furthermore, the interpretations teased out of the algebra are then supported by number illustrations, often based on historic prices and yields. Although this deep dive into the number side of bond yields should appeal to all the bond math geeks out there, my primary goal is to provide everyone who is interested in yield to maturity with an accurate understanding of the concept as well as an intuitive way of applying this knowledge. What's the bottom line here? It is that yield to maturity expresses bond values in an extremely useful fashion. A bond's yield to maturity is the relative cost today per dollar of future cash flow. Interpreting yield to maturity as a measure of relative value and risk is now available on Amazon.com as an ebook. My goal is to have a print-on-demand edition available within the next couple of months. Please contact me with any questions or comments via the comments section to this video or at my website, insidersguidetofinance.com. Peace to all.